Stokes here. Welcome back to another video. If you guys are new, I'm a Forex trader, a trading coach, and one of the co-founders over at tier1trading.com. Typically, I come here on YouTube for a weekend video showing you guys a little bit of what's on my radar for the week to come. But every once in a while, when I feel a trading lesson brewing, I like to pop in during the middle of the week, show you what we've been up to in the week at Tier 1 Trading. And today I'm going to show you a trading opportunity that really encompasses the open mindset kind of idea. And this topic comes from a conversation that I've been having really all week long on Facebook. You see, earlier this week I shared, or it might have been the weekend, but I shared a post from a trader that I follow on the Twitter talking about being comfortable with handling losses. And the general theme of the tweet and the photo was that you have to be comfortable losing if you want to win. And the tweet talked a little bit about what it takes to be a winner. Now, maybe you don't agree with the numbers or not, but hopefully you agree with the overall concept. And it said something like, in order to make 50,000 in the market, again, don't worry about the actual numbers, just the concept. In order to make 50,000 in the market, that means you might have had 300,000 worth of profit, but also 250,000 worth of loss, right? 300 worth of profit, 250,000 worth of loss, you end up with a $50,000 profit. And we visited this concept in my live room. I took our traders, or not the live room, the private Q&A on Monday, and we took our traders through my personal example and very similar. And it was more of a halfway split, meaning my total losses were about half of my total wins, and my magic number for the year fell right in the middle. But the same concept applies, that you are going to take losses. Taking steps backwards are a part of taking steps forward. However, as long as your wins, your profit, I should say, outweigh your losses, your equity curve is going to go in the right direction. So if you win 100 pips every time and you lose 99 pips every time, guess what? You're still moving in the right direction by 1 pip. So you have to be comfortable with those losses. Don't let them take too much of an emotional toll on you, because if they do, now those losses start to affect your wins by early profit taking and holding, pushing stops back, and all of the normal psychological mistakes that many of you guys, and myself included, back in the day used to face. And I was talking to this trader I shared it on a group I'm on Facebook, and basically, we were in disagreement. And this trader, he's a coach as well, I believe, and he was saying all the right things, but the part that really bothered me was he kept saying that there's kind of just one way to trade, right? There's one way to be profitable, and if you're not doing it that way, then you're a loser, essentially. And I was trying to say, hey, maybe I don't agree with the risk that the trader is taking in this example, but to each his own, right? I don't really care how anyone else trades. If you are profitable doing what you're doing, keep on doing it. And that's a hard concept for many of us as traders, because as traders, we start off by being very stubborn. And I think we have to be stubborn. There's so much out there. There's so many negative influences out there that if we're not stubborn in how we trade, we fall victim of really sabotaging our trade based off of what we hear or what we see from other parties. So I understand that stubbornness. And even as a coach, when I first started coaching, it was kind of, hey, my way or the highway. This is how to make money. If you don't do it this way, you're going to be a loser. But after years and years and years, and what is it now, 7 years of coaching experiences now? Sheesh. After 7 years of experience coaching traders and just going through all the different personality types and all the different traders, some very, very, very successful, some failing, many in the middle, moderately successful and still trying to figure it out, I've understood, and Market Wizards is a great example of this, I understood that the best strategy, or let's put it this way, there is no best strategy. The best strategy is the one that you are comfortable with as a trader. Yes, it needs to have a positive expectancy, meaning at the end of the day, it has to produce profit. But you could be a 20% winner, a 20% trend trader, kind of like the turtle traders, and make a lot of money. You can be a 70% counter trend trader where you take small profits and maybe even your risk outweighs your reward. But because you win at such a high percentage, you make profit. It doesn't really matter what you do. You can be Gartleys, you can be moving averages, you can be indicators, you can be trend continuation, counter trend, pullback, inside bar, breakout. It doesn't matter. As long as you've done the work, you've done your homework, your back testing, you've proven that the expectancy is positive. Again, over time, if you consistently do the right thing without error, it will make profit. That's all that matters. It doesn't matter how you trade. And I think we need to be open-minded about this. And this same concept goes into the market, right? In the example I'm going to show you, we started off looking at this particular opportunity in a very specific light. It was a trend continuation opportunity. Looking for shorts, looking for shorts, looking for shorts. Nothing else matters. But as price continued to print throughout the week, or throughout the days, I should say, what we were looking at changed. I ended up taking a position in the opposite direction. And this goes back to that not being stubborn, not being locked into a single way of thinking. Because if you're locked into a single way of thinking, you're never going to be able to change your opinion on the market, even when price dictates. You're going to be locked in saying this has to be short, has to be short, has to be short. And even when the market's showing you signs that, hey, I'm no longer looking to be short, you run the risk of sticking with that and just stubbornly taking that position because of an ego thing, instead of being willing to be like, hey, well, that initial prediction was wrong. Let's see what the market's doing. Okay, let's try this way. So hopefully that's the concept that gets across in this trading video. It's a longer live room session, so I'm gonna cut it up so we can keep this short. I'm already rambling for 10 minutes. But I'll show you kind of the initial analysis that we did in our live room, and then we'll come back and I'll show you the trade that I took. It still hasn't finished out. It's kind of sitting in the middle of no man's land, so I don't know if it's going to be a winner or a loser, but hopefully the concept of being open-minded and being willing to change sticks with you by the end of this video. Potential, we had a pennant pattern forming. It may be turning now into a sideways channel, a low and tight flag, actually. We'll see. Things morph over time. That's why the live markets are different from a trading book. The trading book only catches the ideal opportunities. The live market kind of evolves. Which once was a caterpillar is now a butterfly. All right, so first step, identify pound yen. What are your thoughts? What are your thoughts? Are we at structure, near structure, in between structure? Obviously, we've been nosediving. Most pound pairs have been doing that. Kind of the saying over this year in the market was, as far as the pound pairs go, just get short. Reminds me of like the euro, was 2010 maybe? Like just buy it. I think it was 2010, might have been before that. Just buy it. Pound yen's been pound pairs this year have been the same thing. Just sell it. You don't need a reason. Just sell it. Just sell it at any point, and you'll make money. Over the last few months, but yeah, we can still go a little bit lower. We're close. We're close to the infamous zone of this mega wick. But we still have room to go a little bit lower to about 136, $1.36 before it enters my danger zone. Now we can go all the way to 131. We can test this entire range, but it gets a little bit harder to make those predictions once we get past these daily closes. Right? So 136. So we're right up. We're in a structure zone, but we can still go a little bit lower. So there is kind of that. I guess that there was that chance, I guess you can say. Moving down to the 240, and again, Akil, you're supposed to type in when we're looking at this pound yen, 35 minutes. There we go. Why do I give myself more work? Why? I should make the intern do this. Tony says, I was looking long this morning. So here in the 240, here's what we're doing, right? You'll see this clearly on the hourly. This can be one of many things. This can be a potential continuation pattern. This can be a potential reversal pattern. Where we're at the market, 50-50 chance could be either one. Right? There really isn't much of an edge. We are at structure, so this could be a counter trend move. This could be the market bottoming out and starting to reverse. We're seeing that with a heck of a lot of pairs around the market. This could be a continuation pattern. This could be the market taking a brief pause, a pregnant pause, I like to say, before continuing down. Now, does this confuse anybody? Akil, how can it be both? What do you do? What do you do? What do I always say? We want to be predictive in our analysis and what in our execution? Reactive. So this is a situation where you wait. So when you get more experience as a trader, you start to develop a lot of flexibility, right? I'm very flexible. Stretch every day, right? I don't stretch at all. I'm not flexible. My hips are horrible. But in the markets, I'm very flexible, meaning that I have the ability to be aggressive. I have the ability to be conservative. Now, it all fits within rules. I can't just be like, I'm going to be aggressive today, limit order. No, right? It all fits within rules, but I have the ability to be aggressive in great situations with good risk rewards. I have the ability to be conservative in iffy situations with bad risk rewards. This is one of those situations where normally, right? And we'll just go down to the hourly real quick. I think it'll give a better view. And I'll show you what I was looking at last night. Normally, if you see this on your hourly, right? Imagine it right here. And if we're in the middle of no man's land, right? What type of pattern is this? It's a bear pennant pattern, right? A bear pennant pattern. If it's at the middle of no man's land, this is a classic trend continuation setup. We've come off a strong bearish move. The market's consolidated a little bit. The expectation is that we continue with another leg down. However, knowing that we're in that area of structure on the higher time frame makes you want to think twice. So instead of, say, just aggressively trading it and being like, hey, I'm going to get in at any point in here. I'm going to get in at any point, stops above here, because I'm playing for a big breakout down lower. Instead of being that aggressive, because you know we're at a level of structure, what secondary approach do you think you may take? Instead of just randomly entering at any given point because you don't really care about the best entry, you just want to be involved before it breaks out. What's the secondary approach you should take? And this is why higher time frames are so important to know where we're at in the market. Yeah, you say, you know what? Normally, I would be very aggressive in this pattern formation if we were in the middle of nowhere. But because we're at that iffy zone in the market, I'm going to be a little bit more conservative because this could also, right, the chances of this being a reversal are there as well. So I'm going to wait for a conservative approach, whatever that conservative approach may be, and then look to get involved in the trade. So again, this has kind of morphed. It's a little bit different here on the 240. We'll just go back to the hourly, but we want to measure out our range here, right? We want to measure out our range here. And we see that we have lows down here. And we have highs up here. This one's going to stink a little bit, but it happens, right? I would wait for the market to show us which way it wants to go. And we had a false breakout. We can actually look at this. This was our original false breakout right here, right? What do we talk about false breakouts? You guys see it? We've been learning about this a lot lately in the live room. Same as oil. What do we have there? Yeah, you have your breakout, your red candle, which is technically your breakout, and then you have your immediate engulfing. So, which is going to give us a sign of a false breakout, which is going to lower our level for a real breakout. Now, I would tell you what, there's two things that happen here as far as false breakouts. What's the other rule we talked about for false breakouts? Not a rule that I follow yet, but something I told you a lot of experienced traders use. What about the range? 50% of the range, right? I'm going to get rid of this funky monkey stuff. If we are going to see a reversal, if we're going to see a break of the high line here and continue, or if we see a break and close above this level of structure, then we can predict that we're likely to continue up. If we're likely to continue up, where are we likely to go to? So let's start getting our predictions in place. well before this even happens and ask ourselves, if we continue higher, where we like to go. I know if we continue lower, I'm looking for 136 even. I know that off the daily. If we break higher, then where are we likely to go to? Latch says 138 or right below. So right in this area, kind of around here, a little right below it, probably taking this level of structure into account. Anybody else? That's going to be a pretty cool level, just eyeballing it for a range breakout. I'll tell you what that means in a little bit. Naomi says 138.40, 138.80s. So Naomi's looking in this zone a little bit higher up here. Right in there. So one thing we can use to dial down that zone is we can bring in some tools, right? We can bring in some Fibonacci's. We can bring in a Fibonacci retracement from swing high to swing low. This is after looking at structure. We can see that we've got a nice 1618, or not, excuse me, not a 618 Fibonacci retracement right in that zone below 138, right? So a little bit of decent confluence there. If we were to measure this, I don't think we're going to get, this is going to be too far for anything of our bigger swing. Yeah, so we won't even waste time doing that. We can take this swing, however, and we'll see a 3D2 up at that higher level. But a 618 in that first zone, not bad confluence. We talked about a potential range breakout. What I meant by that is one of the ways that people often trade breakouts is they measure the length of the range. So again, taking it from that same swing low to swing high, right? What they'll do is they'll copy and paste that, and they'll say that the expansion should be of equal length. Very similar to like an AB equals CD pattern, but without the retracement, just an equal length breakout. So in this case, if you were to get an equal length breakout, that would take you right up into that 138 zone. So there's a lot of confluence at that zone. I think that's a good conservative level to shoot for. Well, you can't see it much here on the 240 because it's very, very, very small. You can see the divergence that exists down here as well, though, for you guys that are taking that into account, bearish divergence. But as we went down to the 60-minute chart, you can see that we played around with it a little bit during the day. And then about an hour or so after we closed our live room, we did get our break and close above right here. Now, we got this really funky looking candle, right? This really funky looking candle here. It's not really a doji, but you can see it has a long wick to the upside, a long wick to the downside, which makes technical analysis very, very difficult, at least for me. So what I did was I went down to a range bar chart to get a different perspective. I went down to a 130, so a 13 range, and I went down to an 8 range to get a better perspective. And what happens there is we get a much different story. This is going to be on the 8, because I think this gives a clearer view, but you can go to the 13 as well. It gives a much clearer story of what happens, because what do we eliminate on the range bar charts? What don't we have? Again, range bar charts are just a different type of chart, a kind of a different look at price action. Lat said silliness. Right? We eliminate those big wicks. Right? So again, this was the candle I was talking about, which kind of makes things funky. Right? Where again, within this single hourly period, we pushed all the way up, we pushed all the way down, right? And then we still closed bullish, but obviously somewhere in the middle of that range. Because the range bars aren't based on time, they're based on price movement, right? A candle is printed every 5 ticks, every 8 ticks, every 13 ticks, whatever you may, whatever you set your range bar to. You don't get some of these wicks. You kind of get a clearer view of what price looks like. So instead of getting this downward thrust, upward thrust, downward thrust somewhere in the middle, you kind of get more of a trending type of scenario and a clearer way to read price, in my opinion. So that's what we got here on the range bar chart. Why are you up? There we go. Oh yeah, I eliminated that other thing. Sorry. I forgot I got rid of 4 of my charts yesterday, so I'm wondering why I'm staring at a blank screen. But went to the range bar charts, and it gives you a clearer view of the trend here. And you can see here, you can see the breakout of our channel right here. We can see our classic pullback. You can see the higher high, higher close, another pullback, and then we do what markets do. So I'm looking for a move to, what is it, 80s? 137.86. Looking for a move to 137.86. So we did not quite get there, and that was the whole, that was the same level we analyzed yesterday. So we'll see. But hopefully what we're seeing here is we see some type of consolidation, like a short-term flag pattern, and we see one more thrust up to that level. And that will be a good sign. If not, then we're going to see a retracement back in the structure, and we'll see how price action reacts as we get back to the 137.50, 137.30 level. So, all right, so we're real time now, and I was trying to push this back as far as possible, hoping we'd get some action in the market, but it is about 3 o'clock p.m. New York time, so basically the markets are done. The London session has wrapped up hours ago. The New York session is, basically coming to an end in a few hours, less than that actually. And it doesn't look like we're going to get that follow through. So we're going to have to check the news later tonight. But a good example to trade, again, the point is that, it doesn't matter if the trade wins or loses. The concept that I wanted you to take from this video was seeing how you have to be flexible in your opinion, and your opinion shouldn't be based off of what you think or what you feel or what you desire. It should be based off of what the chart is telling you. And you may go into the start of the week thinking one thing. You may be going through your whole checklist and you have this written down. You may come into the markets on Monday and boom, it's a completely different story. The trader that is willing to adjust and follow the story that price tells them is going to be the trader that's going to be consistently profitable. The trader that tries to be stubborn and ignore price and do what they feel, well, they're not going to last very long. So it is what it is. So I hope you guys enjoyed this video. If you did, do me a favor, leave a comment below letting me know. Say, hey, Akil, I liked it, and tell me what you liked. Or if you have a question or another type of comment, I guess, feel free to leave that below as well. I'm always checking the comment section. There are great conversations. We have a great tribe over here on YouTube. It's a very knowledgeable source to just read through what other traders are writing and responding to. Now, 2 more things before you go. If you want some free education, we have a free webinar and a free workshop available on our website, www.tier1trading.com. Just click the link that says free stuff. Check out that free Ascension webinar. Check out the free Trade to Measure workshop. And also, we have a live event coming up soon. My business partner, Jason Greystone, is hosting a live event over in London called the Traders Vault. He's got Mike Bellafiore coming out. He's got a few other traders coming out as well. I'll put a link in the description box below, but make sure you check it out. It's going to be an amazing event. It's at the Millbank Center. Is that it, if I believe correctly? Yeah, the Millbank Center right off the river. Tickets are on sale now. It's July 11th. Make sure you check it out. Link will be in the description box below. So until next time, traders, plan your trade, trade your plan. Remember to like and share before you leave. And I'll see you this weekend with another weekend edition of Trading